In this video, I'm gonna be teaching my friend Miles how to trade in the stock market. We're gonna go back and forth between looking at a chart and looking at my software. You're gonna do a call.
Is that going down?
No, that's going up. Okay. At the end of this video, we're gonna check back and see if you ended up making money or blowing up your entire account. It is gonna be that separating factor that makes you profitable and the other 90% of people not. Miles, what do you do for a living?
I do real estate in South Florida.
So you're a real estate agent. Why do you want to learn how to trade?
So basically, you don't want to put all your eggs in one basket. So I want to have multiple sources of income, know multiple ways about making money and investing. So I know a lot about real estate and real estate investing, but I don't know a whole lot about the stock market. So I really want to learn about that.
Okay, so what we're gonna cover specifically, because I trade options, is options trading. And I've been trading for 8 years. You know a little bit about trading.
Yeah, I have a little bit of money like in long-term investing, nothing that like I check every day, something I just kind of put in and put aside.
Okay.
Some money in Apple that just sits in there, nothing, like I don't really know any of the basics really, to be honest.
Okay, so you have some long-term investments, but what I'm gonna do is hopefully teach you, give you like a 30,000 foot view speed run of everything that I've learned over the last 8 years, essentially give you a simple but effective trading strategy that hopefully by the end of this video, you'll be able to apply to end up making some more money, obviously building other streams of income, which is something everyone should be doing. Even if you have a full-time job, even if you're a realtor, you can still make money elsewhere. It's good to diversify, like you said. So I'm excited for this. But what I want to start by doing is, obviously you've opened up a Robinhood account, you've deposited $500. I told you to do that. Do you know why?
I don't know why, but I think I know. I've seen previous videos that you've done, so.
Yeah, so essentially what I like doing is showing people what not to do, okay? So most people will just open up a broker, whether it's Robinhood or another broker, they'll fund their account and they'll randomly buy some option contract without any idea what they're doing. So I wanna simulate what a beginner would do, and I think this is a good learning lesson for most people, and I'm just gonna have you pull up a random stock. I've got your phone right here, and I'm gonna let you choose a random option contract. You're gonna buy that contract with however much money you want out of your $500, and then at the end of this video, we'll check back in and we'll see if you end up making or losing money, and I'll cover your losses. But I want
my gain.
Or
no, wait, if I make money, I'll keep it.
I know, I'm just assuming you're gonna lose money.
Yeah, hey, okay. You never know.
Any stocks you wanna trade?
I don't know, I was thinking like Nvidia or something for.
Okay, okay, that's fine. Yeah. Go for it. Okay. So you're gonna look up Nvidia. You're gonna go to trade options. And so the first choice you're gonna be presented with is the expiration date. So you're gonna choose at which point this option contract you're buying is actually going to expire. So you can choose August 16th, August 23rd, August 30th. There's a lot of expiration dates on Nvidia. You can see we've got expiration dates every week. So it's up to you. I'm not gonna tell you which one's necessarily better or worse, but I will say one of them is gonna be based off of the expiration date. It's either gonna be a little riskier or safer.
If I do like a closer, like a tomorrow or well,
August 16th. Friday.
Yeah, Friday.
So
that's like day trading, but you do swing trading, which is longer term, right? Isn't that more like a couple weeks?
Yes, that's true. So what we're gonna be covering later on in this video is my swing trading strategy. So
let's do swing then. Let's do the 30th.
The 30th, okay. So you're right, when I trade from a swing trading perspective, I'm looking to hold that position over multiple days, like 3 to 5 days typically.
Okay.
So August 30th,
you don't even do this long.
I can't tell you anything. Remember, you're a beginner and you know nothing, and you don't have me to help you.
I'm going to August 23rd. I'm changing.
Okay.
I'm changing my strategy.
Okay. Now you're gonna be able to buy whether you want to buy a call or a put. So essentially a call is you betting on the direction of that stock going up, and a put is you betting on the direction of that stock going down. Okay. I know you know that.
Yeah.
But you haven't looked at a chart. You have no idea which way Nvidia is gonna go.
Yeah, no clue.
So
based on just like the current, what's going on in the world, the stock market went down recently. So I just think it's gonna go down. So I'm gonna do a call.
You're gonna do a call?
Is that going down?
No, that's going up.
Okay, then put.
So you're gonna go buy and make sure that's on put. You can fix your expiration date here. Whoops. August 23rd, buy put. Yeah.
Okay. Now we're locked in. We're locked in.
We're good. So next you have to go about choosing a strike price. So you can see various what are called strike prices, the 175 puts, the 180 puts. You can see the current share price is 109.45, okay? Current share price.
Okay.
Now with puts, there's or with options in general, there's what's called in the money and out of the money. And one of those, either in the money or out of the money, is going to be safer and one's going to be a little riskier. Anything I'll tell you right now, any of the strike prices, the 110s, the 111s, the 112s, those are all going to be considered in the money.
Yeah.
With puts, it's opposite for calls. Okay. With calls, anything below the current share price.
So I'm betting on the fact that it's gonna go down.
Yes.
So this is safer.
So why would that be? If you're betting on it going down, you have to choose a strike price, which the strike price just represents like the current price that, you know, the shares would be trading at that date. So essentially what you're saying, and I don't like telling people this, but it is like fundamentally you're choosing a date at which point you think the stock will be trading at a certain price. Yeah. So that's kind of the idea. And if you want that stock to go down, if you're betting on it to go down, well, then in the money and out of the money in the bottom, we're not there yet. So, you know, by August 23rd, if it's trading at 111, you can see how we're already in the money.
Yeah.
So you're right with what you said. In the money is going to be safer and out of the money is going to be riskier.
I like being, I'm risky. I like being risky. I like being risky, Howard.
Oh God. So you can see the contract prices on the right.
Yeah.
420, 470. Do you know what that means? It's not $4 because these are options.
Yeah,
they're leveraged.
Is it leveraged? So it's 400.
420.
Yeah.
So yeah, that's $425 for one contract, and you have $500.
Okay.
So it's up to you. Obviously, they go down all the way to $100 a contract, or even less. Right?
Yeah. I think 108.
108.
Yeah.
Okay. 108. So you could buy one contract.
Yeah.
Okay.
That's fine. I think that's what I want to do.
All right. So you just, choose one, and then if you click on limit, there's what's called a limit and a market order. A market order, you're essentially just saying, hey, I'll buy these contracts at whatever price another seller is willing to sell them to me at, because it's a marketplace, right? So when you're selling a contract, you're selling it to someone else. When you're buying a contract, you're buying it from someone else. Yeah. So you're always exchanging contracts. If you want to go in with a market order, you might not get a great price. You might end up paying more than you would otherwise if you send in a limit order. A limit order, you're specifying at which price you'd like to buy that contract.
So we want to do limit.
We can do limit. Limit might take a little longer to get filled, or you might not get filled. We could do market. Market, you'll get filled right now, and you'll be in the trade.
Let's just do market. We're just going to be right now.
So you can see here, the market price is $370 a contract. If you hit review and swipe up, then you'll be in the trade. It looks like actually now you could get filled at $365.
Yeah.
Okay. All right. So let's see, you're filled. At the end of this video, we're gonna check back and see if you ended up making money or blowing up your entire account. You ready?
Yeah.
Awesome. Now let's hop on inside my computer. I'm gonna show you the right way to do this. Obviously, you just totally chose the stock NVIDIA because, you knew about it. You had some intuition that, you thought it was gonna go down. You saw the market was going down. You're not educated. Let's educate you, okay?
Yeah.
All right.
I'm hoping for some beginner's luck, Okay. I'm hoping for it.
All right, so now we've got a chart pulled up, okay? Now Robinhood doesn't have charts, and that's why you can't really trade on Robinhood.
Yeah.
So Thinkorswim is what I use to trade on, but no matter, what platform broker you're on, just make sure that you can actually see candlesticks. So these candlesticks, these all represent 4 hours. So we are looking at a 4-hour time frame. Okay, so 4 hours, 4 hours, 4 hours, 4 hours.
Yep.
And I look at a 4-hour because I swing trade, and the 4-hour gives me kind of the optimal amount of time where I can see enough from, the perspective of where we're trading at on a chart. I can look back over the last 180 days. So I can see all the way back 180 days, and then I'm able to put on these swing trades and allow for the chart to have enough time to develop, to play out in the direction that I'm planning on it going, right? Based off of my technical analysis. And that gives me about a 3 to 5 day hold period. So all my trades, I'm actually holding for between 3 to 5 days.
Yeah. And did you always do this, or did you used to just do 1 day?
So yeah, I've actually, as traders, we're gonna have to develop year over year. We might change the way we go about trading. I used to day trade, and then I started swing trading, and now I'm back to actually doing a bit of both. I wouldn't recommend that anyone try to do both in the beginning. Obviously, I've been trading for years. So at this point, I want you to focus on obviously just the swing trading. And so the idea and the premise here is that we're gonna pull up my software, okay? Now I have my own software. This is, I would say, a tool that I've spent the last 4+ years building. I've heard traders say edge, and it can be misconstrued, but I think an edge can come in many forms. But it is essentially what is gonna set you aside from everyone else trying to make money trading. It is gonna be that separating factor that makes you profitable and the other 90% of people not. So my edge is this software, and essentially, I'm gonna pull it up on my screen.
This is it. Okay.
Now, I've been trading on this software, like I said, for 4 years. It is essentially order flow. Do you know what order flow is?
No.
So I'll give you like a 30,000 foot view. All of these trades or orders that we can see here, well, these are all from other individual traders out in the market. So we're seeing other people's orders. It's kind of like pulling back the curtain.
Oh, okay.
And we could see a deeper level as to where people are putting their money in specifically the options world. Okay, so if I pull up an options chain and I go to, let's say, the August 23rd contracts, that's when these contracts expire, right? It looks a little bit different on my broker, but you can see here, obviously we've got the strike prices, and then we've got volume and open interest. So open interest are essentially how many contracts are out there right now open. And then the volume is how many contracts have been exchanged between a buyer and a seller on that given day. So you can see here for these specific contracts, the August 23rd, 40 strike price, we've got calls on the left. You can see that there are 11 of these contracts currently held by other people. And then 60 contracts today have exchanged hands from one to another person. So when we're looking at this open interest, well, how do we know whether that is just one person holding all 11 contracts or whether that is 11 people holding one contract? Do you get what I mean?
Yeah.
So we wouldn't know, but essentially what my software does is it allows us to see just that. Now there's a lot going on here. I'm gonna narrow kind of down the data, and we're gonna be looking at a couple things specifically. So I've got this filter that I've actually got built in. We're gonna click on the swing trading filter. And now the orders that populate here, these are the trades that I'm actually going to be looking at. This is how I'm finding the stock that I am looking to trade based off of the orders that come back, obviously, once we've applied this swing trading filter. And we can see there's 15. So instead of going through the S&P 500, the NASDAQ 100, the Russell 1000, and looking through hundreds of charts, trying to identify what is called a setup. And we're gonna cover these setups and what I mean by a setup and what we're gonna be looking for, obviously, in a bit. But this is, I'm obviously trying to give you a very broad overview of how my system works. Well, we're gonna pull up these tickers. We're gonna look at the chart, and we're gonna continue going from the software to the chart, pulling up the ticker and seeing if there's a setup we can identify there from a technical perspective. Does that make sense?
So yeah, you're gonna show me basically like what I should have done when I made that trade.
Yeah, so in order to actually be educated, we obviously need to know the basics when it comes to trading. And in order to be profitable and find that long-term profitability in the market, we need an edge. So you're gonna use, in this video, we're gonna go back and forth between looking at a chart, okay, and looking at my software. And then hopefully, you'll be able to choose a stock, buy an option contract, knowing that at least you've done everything in your power to make the most educated decision that will play out, obviously, in the direction you bet on it going, that stock. Okay, so the most recent order on my software was ticker symbol TGT. So essentially, what we're gonna do is pull up TGT, okay? And now we can see the chart. What the software does is it answers the first two questions that every trader has to answer. What stock do we trade? And what direction do we bet on that stock going? We know that we want to look at TGT, that's the stock, and the direction that we would want to bet on TGT going, well, you can see here, we got a call.
Yeah.
So we'd want to bet on TGT going up.
Yep.
And you can see the cost basis is 160,000. That means some individual out there put $160,000 behind these contracts, these TGT September 13th, 139
One person?
calls. Yep. So, you know the expiration, you know the strike, you know what
So they think it's going up and the expiration's tomorrow.
So September 13th, not August.
Oh.
So a month
1
out.
month. Yeah.
Yep. A month out expiration, which is pretty close.
Yeah.
Right?
Yeah.
I would say, you know, close is like today or this week, but by no means is it conservative. You could buy contracts that expire a year or 2 years out. So this guy is saying in the next month, you know, he thinks TGT is gonna go up. So we're gonna pull up TGT. You can see the chart here, which is target. Now, when it comes to charting, we're going to be looking for a couple of things from a technical perspective. I'm gonna pull up a checklist and I have 3 setups, okay? There are 3 ways that I go about categorizing what I see on a chart, 3 setups. And I have a checklist for each setup. And we wanna check off all the boxes on that checklist, okay? In order for us to look into that trade further and decide if it's a trade we want to take. So I'm gonna pull up one of my checklists. So this setup is called my pullback play. So we've got entry criteria and we've got trade management. So we've got TGT pulled up. We're gonna first look at our entry criteria. So the first box that we need to check is overall trend, okay? Overall trend, you know what the trend of a stock means?
Yeah, like which way it's going. Right?
Yeah, bottom left to top right.
Yeah.
Top left to bottom right. So whether the chart is bullish or bearish, now obviously bullish just means it's going from the bottom left to the top right.
Yeah.
Bearish means the chart is trading from the top left to the bottom right. And we want to find a chart, obviously pertaining to this pullback play. We need to find a chart where the overall trend is bearish. So from top left to bottom right.
Which it is.
Which this chart is bearish. You can see the high here at 181.86. We've been pulling back off that all-time high. And if you're not sure if it's bullish or bearish, you can just look to see overall if lower highs or lower lows or both, right? In that case, you'd see lower lows being formed. So lower low, lower low, lower low, lower low. That would tell you, okay, this is definitely bearish.
Yeah.
Okay. Now, next, we want to see that the all-time low was just formed or previously formed. And you can see the all-time low here is at 128.71. Now, all 3 of my setups, we're gonna be trading either around an all-time high or an all-time low. So if you see we haven't recently just formed an all-time high or an all-time low, or that all-time high, right, or that all-time low aren't relatively close to where we are, then we're not gonna look to trade that stock. But I'm gonna show you right now what I mean by this. If we draw out a just price level, okay, we're gonna mark out our all-time low. We're gonna draw a line from our all-time low at 128.71. Okay, 128.71 is our all-time low. That is our area of support, okay? You know support and resistance?
Yeah.
Support's a floor, resistance is a ceiling. We're either gonna look to play a move, well, in certain cases, down to support, okay? We're gonna look to play a move up to resistance. And in this case, we want to play a move down to support at that all-time low. So you can see our low and you can see where we're currently trading here. We are currently trading at 135.18. So the all-time low was not just formed, it was previously formed.
Yeah.
But now what we want to do is we want to use this tool that I have. Up in this top left here, you can see the average daily range and the 5-day projected movement. This is my ADR calculator. This is a tool that I built that I will link in the description if you guys want to download it. Okay, so when we look at our 5-day projected movement, why 5 days? Because my average hold period is 5 days. We are essentially going to chart down and figure out how far below is our all-time low sitting, okay, in percentage. So we're gonna click here, okay? We're gonna try to be as accurate as possible, right? You can see we're trading at 135.20. So we're gonna click and then we're gonna drag down to that all-time low. And you can see we're trading about 4.78% off of that all-time low, okay?
Off of it.
Yeah.
But it says up here 4.5%.
Yep.
It's like, so it thinks it's gonna go up. Like you're...
So
that is predicting that it's going to go.
What that is telling us, it's not saying it's going to go up or down. It's saying that over the next 5 days, it is projected to move around 4.5%.
I thought because it was green.
Oh, no, it's just green.
Yeah.
That's a good point, though. We could change the color if we want.
Yeah.
But that is just telling us that over the next 5 days, we could expect, and this is when it comes to actually setting a realistic target, what a lot of traders struggle with. Traders will set a target, say, where they want a stock to move 10, 20% in the course of 3 days. But you look at the last 6 months and that stock has never moved 10 or 20% in 3 days. So we're just trying to, right, use to our best judgment using this tool. If we could actually realistically see a move back down to this all-time low in the next 5 days. So that means if, that 5-day projected move, well, if that is more than the amount we're currently sitting off of that all-time low, if it was, say, if that all-time low was, say, 6% off of where we're currently trading, well, then that's just not a realistic move to see in the next 5 days.
It's most likely going to be less than, 4, because that's 4.7. 4.5, so it's realistically close.
It's close. We're just about there.
Yeah.
I mean, if this was 2, if our 5-day projection movement was 2, and we're sitting, 4.8.
Very unlikely.
Yeah, we're never going to hit that target. Very unlikely.
Yeah.
It's very unlikely we're going to actually hit that all-time low in the next 5 days.
Yeah.
Does that make sense?
Yeah, that does that. I didn't get it at first, but now I understand.
Okay.
It's kind of just like gives you an idea of like, it doesn't, obviously it's not like I'm going to tell you which way it's going, but it kind of gives you an idea of like where to keep it inside of.
Exactly. So we can make a realistic, target. We can set a realistic target. So that is going to essentially let us check off this box because we could see that is a realistic area to hit in the next 5 days. Make sense?
Yeah.
So if this all-time low was way down here, then, it would never happen, right? Unless the 5-day projected move was significantly more. Okay. So next, pattern of lower lows. We looked at that. Okay, lower low, lower low. So you can see candles formed a lower low, candles formed a lower low, candles formed a lower low. Good. That's the overall trend, right?
Yeah.
Pattern of lower highs. The lower highs, now this is going to come down to how clean and how clear the chart is. The goal through this entry criteria checklist is obviously to check off all of our boxes. That is going to give us, I like to say, the most certainty behind that trade playing out in the direction that we want it to play out. Now, if we can't check off a box, it doesn't mean that we can't take the trade. It just means it's like a degree less certainty that that move is actually going to happen. And you can see here, we haven't been forming lower highs. We were, and then...
But yeah, we haven't recently.
Well, actually, it does look like if we want to do this, we can chart out our highs. So you can see we pulled back, pushed, and these areas are never going to come into play in our actual trade plan. We're trading all the way down here, so it doesn't really matter what's happened up here, but we just want to see that the overall momentum of that stock is being carried in a certain direction, and we're looking to trade that direction. So we're just charting out here. You can see we pulled back, pushed, obviously formed an area of resistance at 157, and then we actually weren't able to break back above. We tried, we tested. Okay, so that's actually a really good sign. It was close, but we were not able to break that previous high. So we actually are forming lower highs. So that's great. So we can say check, pattern of lower highs. Now, when it comes to moving averages, we've got these 3 lines on my chart. We've got this blue line, this red line, and this green line. Now, the blue line is the 15-day EMA, the red line is the 50-day SMA, and the green line is the 180-day SMA. These are what I call moving averages, and these moving averages are just giving us a visual representation of the average price movement of this stock over that duration of time. 180 days, 50 days, 15 days. Based off of where candles are trading in relation to these moving averages, they're either going to be acting as support or resistance levels. So if candlesticks are trading below one of these moving averages, that means that that moving average is going to be acting as resistance. If they're trading above this moving average, it means it's going to act as support. Okay, so you can see back here, well, coming off of this low, we were trading above this green line.
Yeah.
We pulled back, tested, bounced off, pulled back, bounced off, and you could see multiple tests. We were still able to hold above this green line until we broke below, trend shifted. Okay, we went from bullish to bearish, and since then we've been pretty much trading below the 180-day SMA.
So that's a really good way to tell if it goes below the 180 SMA.
If it's bullish or bearish?
Yeah, if it's trending the other way.
Exactly, good point.
Okay, yeah.
If it's trending the other way, we could see obviously that change in direction upon, that break above or below the 180-day. Now, with this setup, the 180-day is typically not going to come into play. I would say that when it comes to all three moving averages, when you look at charts that are very clean, that are very clear, that aren't choppy, you'll see that over the last 180 days, that moving average will be respected. Or like I said, trend might have broken. And then when we look at the last 50 days, right? We're going to look at the last 50 days. So this red line over the last 50 days, you can see candles have been trading straight through it. So this 50-day SMA is neither respected, it's not respected. It's neither acting as a support or a resistance level. This chart just doesn't care about the 50-day.
Yeah.
So we're not going to use the 50-day when making our trade plan. And when it comes to the 15-day, well, we can look over the last 15 days. And obviously we had this very dramatic move to the downside. This was, very abnormal movement when looking at this stock. That's a pretty big pullback, but the 15-day, it doesn't look that respected. We traded into it and now we're trading on it. So this might be a little more difficult when it comes to actually setting our trade plan, identifying where we're going to be right and where we're going to be wrong. It might be a little more difficult to figure that out because, well, we know that from our trade management, we want to play a move down to that all-time low. So the idea of this setup is to essentially short from where we're currently trading down to that all-time low. This is the move we're looking to see happen, and we're looking to see that happen obviously in the next 5 days. So this is our target. And we can see here that when it comes to all these moving averages, none of them are being respected. So how do we know where we're going to be wrong? And that's the hard part, is finding an area of resistance overhead. We want to see an area of resistance overhead, when looking at these moving averages, where we can determine, hey, based off of, say, the 15-day, it had been respected. And I'm saying theoretically, if the 15-day had been respected and we had been trading below it with rejections, we could say, hey, if we break above the 15-day, that's where we're going to be wrong. But it's not clear here.
The other thing that's
to me
clear is the 180-day SMA.
The 180-day is clear, but the 180-day is also sitting, well, 12+% away from where we're currently trading.
Yeah. So wait, if you go back, I kind of want to see what it looks like. Wait. So if it was below and then when it went above, it went down. So right now, when it, what do you call it? You said respected?
Yeah. Resistance.
When it resisted, it went back down.
Yeah. So I mean, yes, I would say the 180-day is resistance, but let me show you why that wouldn't matter in this case. So let's say here's our downside. Let's say we were going to get out of this trade if, that would be a resistance area, obviously previous resistance. Here's where the 180-day is currently trading. So we'll actually mark where that is right now. I'm going to explain to you why. So here's where we're right. Here's where we're wrong. Here's how far away we're trading from where we're right. Okay. Within that 5-day projected move, here's how far away we are from where we are going to be wrong.
So 7%. In the 5-day, it's unrealistic.
It's unrealistic to hit, but also if there is so much more room for essentially you to take a loss, if we're sitting just kind of as a rule of thumb, if you look at, okay, we're sitting 5% off of our target, but we're sitting 7% off of our, our stop loss where we're wrong, we can kind of assume that we're gonna be losing way more than we're even gonna have the potential to make. So maybe in some rare cases, if you wanted to go and you want to instead swing 5 days out, you wanted to hold a position for a series of weeks, and you wanted to buy some really safe contracts and you wanted to put on way more risk than you would even be willing to make on this trade, then maybe we could use that area. But I'm telling you right now, based off the way we trade, that's an area that is sitting way too far above we would preferably like to see that the 15-day is respected, and we could set our area where we're wrong, our stop loss there. There's just nothing clear here.
So based off of everything you just said, this wouldn't be something that you would trade.
No, I would not trade this.
Yeah, and that's just based off of the 15-day realistically.
Yeah, because if we saw the 15-day was respected, hey, I would go about setting my stop loss on the 15-day. I would run my contracts. I would determine my risk to reward. I would use my risk management calculator to determine how much capital I should allocate to that position based off of the risk. But yeah, in this case, we can even go back and look at the software, TGT Calls. Now here is the interesting part. I will not put on a trade if my chart bias is in opposition to the order behind the software. If I don't agree with what I see on the chart from a technical perspective, then I would not put on that trade. So even now, even if the 15-day was respected, now you could see, hey, TGT Calls.
But you're also swinging on a 5-day, and their expiration's a month out.
They could be swinging a day, they could be swinging 3 weeks. We just don't know.
But so what happens, like, you're saying they can pull out any time within that expiration date?
Think about it. When we bought a contract, when we just purchased this on option contract, well, we could sell it 2 seconds after. So the thing is, we never know when someone is getting out of the trade. We are just using this for obviously those first 2 questions, what stock to trade, what direction to bet on it going, and then our entry. But we have to determine our exit, where we're right, where we're wrong, based off of these setups, and then obviously gauging the risk behind that trade.
Yeah.
So my point is, if my technical bias on that chart does not align with the sweep, or you can see here, the sweep or other order behind my software, I'm not going to take the trade. My bias is short on this chart. I would still go short even though I'm not, because of those reasons. Well, these were calls. Yeah. So I'm not going to take this. Now, if we go through, I don't want to go through too many more charts, but I want to look at one more order that came through on my software. So I think you're starting to understand. What I'm going to do is I'm going to look at, obviously, my software. I'm going to look at the stock. I'm going to pull up the chart, and I'm going to go through one of my 3 or all. I'll look at all my setups. I've got all the checklists. Well, look at here, Sono. We've got Sono puts, overall trend bearish. Look at our checklist. Yes. Yep. All-time low just formed. That's great. 180-day respected. Very clean, very clear. Look at that. It was respected on our way up. We broke below. You can see 50-day looking very respected. Yes, the market likes to probe these areas. And then we see that a lot of beginners will set their stop loss right above a moving average. Well, they got shaken out. And now look at that. We pulled back, we retraced. So, you know, even if you see little smaller probes of an area, well, that is still a moving average being respected. So 50 days respected. And then the 15-day too, looks like it is respected here. Yeah. So we would set our target. Okay. That is our take profit at that all-time low. I would set my stop loss. In this case, I would like to see my stop loss being at the 50-day. Okay. Yeah. It's based off of looking at this overall trend here. And again, there's little details. These are all things that, you know, I'll cover inside my mentorship. And I forgot to mention, I will get you inside my mentorship. Okay. Where I cover all of this in detail. Okay. Yeah. So there are things we can do to mitigate, obviously, being stopped out like most newbies would. But for the purpose of this video, let's say our stop loss is going to be here. And this would be our trade plan, our take profit and our stop loss. So I totally agree with the bias behind Sono. We've got Sono puts. My bias is short. Okay. I'm bearish on this chart, which means puts. I would buy puts to capitalize on this move down to that all-time low. Mm-hmm. So this is a great chart. We've checked off all of the boxes, okay? Yeah. Pertaining to this pullback play setup. And now I'd go about using my risk management calculator. There's another tool I'll give you access to when you get in my mentorship group. We'd essentially just punch in our take profit, our stop loss, And that risk management calculator would take into account how much capital you have to trade with, whether that's $500, $1,000, $10,000, and then essentially how risky you want to be or conservative if you have a low risk tolerance, a medium or moderate risk tolerance, or a high risk tolerance. And then you can go about putting on that trade with say $500 or say $800 in capital. You buy that amount of option contracts, whatever it would be. Say your position size is $800.
Yeah.
You'd buy 4 or 5 contracts, and then you'd sit back and you'd wait. This could take 3, 4, 5 days to play out. Either your take profit or your stop loss is gonna be hit, okay? And I'll actually just show you. I taught my friend Hannah the other week how to trade, and we did this same thing. We actually covered the same exact setup, okay, which was this pullback play. And we had set our stop loss and our take profit. We had used the ADR calculator. We even used the risk management calculator. We went through this whole process. You could see our entry was around here. This is where we would have theoretically entered. And then Wolf ended up playing out perfectly. And look at that. Actually today, our take profit would have been hit in this morning's session. So you can see that is a cool example how we just ran through. I just taught another one of my friends the same setup, and you can see how this would have played out in our favor. So it's pretty cool, right?
Yeah, that's really cool.
So how are you feeling?
I feel a lot better now. Like now I kind of understand that, and it's definitely smart to like set some guidelines. And I mean, there's so much that I could still learn, but it's a little bit more clear now. Now that I understand like certain trends and stuff, but I mean, I still have a lot to learn for sure, but
you're feeling more educated.
Yeah. I didn't know really anything going into today, so I mean, every piece is like a little bit of information that I can take away. So
awesome.
Cool.
Okay.
Yeah.
It is time to see if you ended up making or losing money. Let's open up your Robinhood account.
Ooh, let's go. Let's take a look.
Okay.
All right.
So click on. Scroll down.
Okay.
You lost 4%.
Damn.
Dang.
$12.
That's not bad.
$12 down the drain.
That's not bad though.
Yeah.
But you lost money.
Yeah.
How do you feel?
But I don't have to. Technically, I wouldn't have to sell the contract right now.
You could hold it, but what's your trade plan look like? Where are you planning?
No idea.
Where are you
I have no idea.
getting at?
So it's like I could lose $12 right now, or maybe lose more. Is what you're saying?
I think just keep in mind that traders have they do a really good job at letting positions bleed out, but taking profit really quick. And that's the problem. You want to cut your loss.
Oh, we're down to 50.
You want to cut your losses quick.
Yeah.
And you want to let your winners run. So let's get out of this. Let's get out of this trade, okay? And that's a learning lesson. We can go in with market to get out of that. Again, this is what will happen to most beginners. Some people do have that beginner's luck, but don't let this be you guys.
Not me, man.
Don't be Miles and lose money because you randomly bought some option contracts.
Yeah, no Chipotle today.
Yeah, I mean, look at
No Chipotle.
That sucks. So review, let's send this through. I got to get you in my mentorship
so
you can keep learning. You can keep educating yourself and you can start making some money trading.
Yeah.
Any final words?
No, thanks for having me. I appreciate it. I learned a lot today, and I look forward to going in the mentorship group and learning more.
I'll put a link in the description below so they can join and learn with you, and I'll get you in the group right now.
Cool.
All right. Thanks for coming on.
Appreciate it.
Thanks for watching, guys.
Yeah.